Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's update our review on the gold market. So here maybe we do not have as much activity as on the euro currency. You could see what has happened on the euro on Monday. It was really strong gap up opening session. And also there are a lot of interesting stuff stands around the euro currency on the dollar index, on the British pound, so really some things to think about. While on the gold, we do not have this kind of the actually amounts of the trading setups. Situation stands a bit more quiet, but gold currently is behaving absolutely different. So if previously we could find some relation due to the similar response to the strength or weakness of the United States dollar, in recent year gold shows absolutely independence. So that's why probably, despite that we have some bullish signs on the dollar index today on the 10-year bonds, it will be not quite correct to suggest that the gold could show a really fast acceleration. If it will happen, it mostly will happen due to results of the election or some other psychological moments, maybe emotional reactions, trying to shake the boat by the speculators, and so on. But hardly it will be some reasonable changing in evaluation of the yellow metal. So it means that in general we are following our trading plan. Yes, if you take a look at the dollar index, for example, we have here double repo sell, suggesting weakness of the dollar in the nearest time. So discussed today in the euro currency analysis. On the 10-year bonds, you could see that right after the jump, the same gap down has happened on the yields. Some demand, strong demand for the 10-year bonds have happened. You can see market now is calling around, but yield has dropped almost for 1 decimal point. It's a really significant drop just for one session. It's opening difference, and that potential is supportive for the gold market. But if you know, as you know, our general view that market stands right now in an area that is perfect for significant retracement, because gold market is ready for retracement for a long time ago, but different fundamental political, geopolitical factors haven't given a chance to relax. So just accumulation of this pressure stands on the market, and currently it seems this ability for the market to accumulate this pressure and overcome this pressure is starting to fade. It's exhausting, which is might be expressed in some kind of the tiredness of the market of the moving higher. And this is our general thought, that we will be watching in the long term and within a few months around current levels, 2,800, 3,000 area. It's now an area where we suggest that gold has really very high chances to show strong downside pullback. We explained this in our weekly report. On a daily chart, meantime, we're going with our training plan. If you remember, we said that let's keep watching. So first area that we'll be watching for is 27.18, first support. And in general, the area that we are interested in is around 27, because this is, here we have 26.70 confluence support, slightly higher. We have the 26.90 daily average sold. So potentially for a short-term perspective, this might be interesting area to consider long entry. And for that purpose, we already discussed the hand-shoulders pattern that is forming. The major question currently is whether the market will be able to reach the neckline prior to the election's result will be announced. And once it will be announced, it's very difficult what the destiny will be of this hand and shoulders pattern. But currently, as everything goes as we have planned, here is two chances, actually two different scenarios are possible. For traders on the intraday charts, you could consider taking the long position around this area in 27.18, which is actually also support area on the daily charts level might be visible. Trying to buy from the neckline with the upward bounce somewhere to the 27.55 area when the market will start forming the right arm. And second, this is of course bearish setup, classical for the hand shorters, and trying to sell on the top of the right arm when it will be formed. So this is what we will be watching for a very short-term period, and then we will see what will happen after elections, because currently I do not see any big sense to discuss what might happen after elections, because nobody knows what will happen. And actually, when we will get this information, we will get the picture on the market, we will be able to create the trading plan or updates what we have currently.